Welcome to TradeTheMBI.com. This is John. This report is for the 9th, and well, we're starting to build up towards some excitement here. We've got both the Fed, we've got contract rollover. Lots of excitement with that because you're going to get a confluence of money needing to move, change, and do other things. Oh, and whenever you see these C's, you can change the window, or you can do the all of your windows all at one time, and it just clears any alterations. So here's the big thing that we were noticing. Couldn't get orange out of the plus 13 range. That's going to continue weakness, no question about it. You need it to dip down below. At the same time, you need your steel crossing back above the plus 13 to give yourself an oomph. That we've had zero short-term buyers. The money's just been on the sidelines waiting to see. Obviously, you had huge job numbers, which in some people's mind, I think is going to move the Fed towards tightening already, which it's just a bizarre notion at the beginning of a recovery that you would even think about wanting to raise rates with the GDP numbers. But it's an interesting one because, where you maintain this zero growth, this is going to be the dampener going forward, and that's an interesting one. So you're going to see whether the Fed is at odds with the idea of a pro-growth policy, and or if it's able to transition. There's always plenty of time to raise after things get moving, but to do it before they get moving is an interesting one. Yes, fine, they want to normalize after a decade of quantitative easing and making things easier, but those of us who have an idea about economics know that it's not such a good thing. Just go back to Bernanke and his fear of inflation and what it did in 2008. I think that was the easiest example near term for anyone to recognize the impact that interest rates have on housing and the ripple effect of that. Now, we're getting lower shakeout readings here. We've got shorts well above zero in this particular case, and we're starting to move into a lower zone with the DOC red. Now, this actually is helpful because we're easing the overbought. Haven't really moved price that much. We're right at that same 2360 that we had from our 5K SP charts, S&P, because that was where the algo originally began the breakout after the president's speech to the joint session of Congress. We've actually seen Obamacare roll over now. There's no real definitive determination as to whether or not there's consensus. And the market realizes that without consensus on that, taxes and tax breaks are going to be delayed. And that is really the impetus. However, the incredible job numbers is also a reason that a lot of them aren't selling, because at the end of the day, an improving economy lifts all boats. Continuing to put pressure on the euro, no matter how much the central banks seem to pump at the right time, they're just having a hard time because there's just a lot of net equity movement from Europe to the US because, frankly, Europe's got a lot of problems, and they're all going to start culminating here in the next couple of weeks as we move towards the elections in France. You've got all sorts of issues in Italy. Questions about immigration in Germany, and also the outskirt countries talking about developing their own. I think even Le Pen came out with her idea of the new franc. The Greece thing is going to start to heat up. It's been on the back burner. A lot of people haven't heard about it, but it's definitely brewing again. Now, this is no shock. We've been talking about our target down here at the 113. Everyone talks about the rally. Yeah, there was a rally off the steep decline. The steep decline, though, is related to this oil. Again, finally, they're starting to realize the realities. The realities are they can turn up that production in an instant. And without the corresponding economic growth, you've got a glut, and they don't know what to do with this glut. It's everywhere right now. They finally can store it on ships for a while, but that's becoming problematic. We had the little short signal that developed in gold. I think that on the reboot, that's going to be an attractive one. No real positive extremes that needed to be filled beyond where we were before. So I think that we're just retracing the latest pop, and this is a much earlier move than took place with the market, but it's exactly the same effect. It's just retracing the same breakout move. And we saw from our 5K chart, if I shrink that just a little bit, we can see, no, that's too much. I gotta take off the ABM, and that'll open it up right there. We just got to the divergence above the 2360 breakout point. It came back revisited, it attracted buyers. We're right at the same spot, attracting buyers again. And we don't have liftoff because of that daily chart and what it's telling you. So it's just gonna be a little longer, and then everyone's gonna be surprised when it actually does happen. Of course, you still have the gloom and doom prognosticators out there that the sky is falling and that the earth is ending, yada, yada, yada. And they've been on the wrong side of the trade for, well, going all the way back from November. And you can see how the hedge funds and some of these have performed rather poorly. Everyone who is just regularly invested has done very well, even in this correction, as they're referring to it. All we did was we had a spike beyond the mean, and if we put that up on the daily, you can see it. When you get too much of a deviation from our ABM, you just revert right back to it. Then the key becomes our green level. And let me put that up there so you can see it. Right around 10 points lower than where we're at right now. So we're flat at this particular point, not a big deal. I think we're seeing some building right there. We may even get a positive shakeout out of this at a good time with there. We didn't see the orange reset underneath. I don't think this move lasts. We're probably gonna get a little higher red, retrace a bit, and come. The contract rollover is going to start to have a little bit of impact here as we end the week, preparing to go into the next one. So those are all factors that need to be on your mind. But I think that this 2360, again, it's turning out to be exactly what it was before, that same build point. And it's just a consolidation at this particular point. So all in all, it's not horrible, but again, I think that moves above, long, anything below it, you can be out and or short is a little tougher because I don't know how much movement we're gonna see below this 2360. It's not gonna be a whole lot of points. As long as you're flexible enough to rotate, that's gonna be the key inflection point. So that's the basics of it. As always though, to look for me on the Skype chat. Trade well.